Glam Estates Radio with your hosts Coco and Gregory, right here on LA Talk Radio.
Welcome everyone to the Glam Estates Radio Show. Today with me I have Coco Selburn and Ari Tinus.
Hi Gregory. Hi Ari. How are you today, Gregory?
I'm doing great. I'm very excited to be here again.
Yeah, we're up to week 2. This is fun.
Yeah, we made it.
Woohoo! I'm excited today. We had a lot of great feedback from last week. Thanks everybody for tuning in and all your feedback and supporting us. And we can't wait to be here for more for you and sharing with you how you can have the best opportunities in real estate and have the most glam way about going through all these steps.
It's all about glam.
Uh-huh. Well, I'm excited as well today. As you know, we already have one of the best lenders I've ever worked with in the entire time I've been in the industry. And as we know, that's a long time.
So everybody guess the topic.
Today's topic is lending.
Always fun.
This is our friend and great asset in the lending industry, Mr. Ari Tinus.
Hi, folks. How you doing? Coco, Gregory, thank you for inviting me to the show. Really appreciate it.
Ari, we're very happy to have you here.
Thank you. Happy to be here.
You may see that from time to time. Yes. Yeah, Ari has so much great experience. The idea behind part of what we're doing today is really to educate people and taking all the mystery out of real estate. We want people to come in and understand that there's nothing to be fearful of and to know exactly what the steps are in order to move forward. So one of the greatest mysteries of life of real estate is lending. And we're going to debunk a bunch of the rumors and we're going to go over exactly what different programs there are. And we're hoping you can be a great resource to give us some enlightenment about what's available out there.
Absolutely. Well, I'll try to answer all your questions to the best of my knowledge.
Great. Turn on the light. Put them under the microscope.
So as Coco said, Ari's going to break down the process of acquiring a mortgage. And also he's going to tell us everything about all the items that one needs in order to get pre-approved for a loan. And also we're going to speak about crooked lenders, who to avoid. Not who to avoid, but like what to avoid.
What can happen under the wrong circumstances.
In order to have you protected, we want you protected.
Yes, please.
And good or bad lenders and types of loans. As Coco said, FHA, VA, all of them.
And Ari, can you give us an idea? Can you share with our audience how long you've been in the lending industry?
I've been in the lending industry for over 15 years. Always in mortgage origination side, but I've of course helped to process files. I can been there through a transaction from beginning to end.
Yeah, to say the least.
To say the least.
Yeah.
Sometimes I have to wear quite a few different hats within the process as well.
And just like us, sometimes you're the therapist, aren't you?
Oh, yeah.
I have a couch ready for that. Yep.
Poor Ari. I've seen you through some really tough circumstances that you have come out like a champion. No one even knows. The client generally has no clue the leaps and bounds you've gone through in order to make that look like it was no big deal.
Thank you. Thank you. Likewise.
No big deal, he says. I got it done. It's fine. Which is the kind of lender you want to look for. And as we know, different markets have different circumstances. With Los Angeles, it's really particular to know exactly what kind of loans are being on the trending market for acceptance for your purchase. Now, a lot of people are probably thinking, and a lot of our first-time home buyers often wonder, who cares what kind of loan I'm getting? It's none of their business.
Right.
To a degree. Now, if you're a cash buyer, that's true. No one cares because you're a cash buyer.
Uh-huh.
Mm-hmm. Mm-hmm. That's very true. I mean, unfortunately, escrows fall apart, and majority of the time it's due to the loan portion. Everybody comes to me, and well, not to me personally, but in general, they have a lot of offers out there that are, even when you're pre-approved with a bank, direct lender, broker, whoever it may be, they still come by and want you to get cross-qualified with their approved lender. And I know you guys have experienced that quite a bit. And at that point, that's where you have to reach out to their preferred lender and give them some additional information to make sure that the pre-approval that you have is actually valid. And this is just as a result of everything that's happened probably about 7 years ago, where the mortgage market really, they blame the recession, the meltdown, to bad, faulty mortgages, to say the least, and not lenders not being responsible when they were not making loans that were going to be best for the consumer. We've got a lot of watchdogs, Consumer Finance Protection Bureau. Everybody's involved now to ensure the consumer, the homeowner, is protected.
Yay.
With that comes a lot of guidelines, a lot of stringent requirements that we all need to meet in order to qualify. But when we do, we can take advantage of really nice low rates, such as right now the nation's average 30-year fixed rate is around a 4%, and that's high
Wow.
compared to last year.
Right.
So that's still 4%.
No, that's great compared to my parents when they first bought a home.
Yeah.
In the 70s and 80s. Okay,
For
was
how much?
Yeah. Okay, so check it out. Totally.
I mean, I always laugh with this.
This is hilarious.
Talk about people worry about our values going up or they're going down. I mean, let's get a grip here. Check this out. They bought their house, and mind you, it was 1971. They bought a 5-bedroom home, 4-bath, and they had a discussion when they bought it. When they bought it new, it was $18,000, this house. And they had a big fight whether or not they were going to have a pool for an additional $3,000. And apparently that was like a really big, they weren't sure if they wanted to do that. They ended up buying with the pool for $21,000.
Just like the other client of ours, who just a couple of weeks ago, who bought their house about 30, 40 years ago for
$36,000.
Now they're going to be on the market for
1.8.
1.7, 1.8, yeah.
Yep.
Yep.
And
Crazy.
the important thing to know about this is that was the middle class buying. A lot of people shied away from the process because rents have gone up. We can talk about that as well. But because of that, it's been more of a challenge in recent years, Generation Y and Generation X, whether or not they're able to even make the ability to qualify. And because jobs are even different than they were then,
So, Ari, now things are more tight in order for someone to get a loan like it was before. So, are people more protected?
Well, yeah. Essentially, when you have a lender involved in a transaction, they're looking out for your best interest. They're making sure that the property you're buying is a good collateral. Also, they're making sure that you're going to qualify. We look at income, assets, credit, job history, and also the property itself. So, really, we're trying to do everything that we can.
I know Coco loves to joke with this, that is just saying like, oh, you make how much? Like 20,000? Okay, let's say 80. And we get you a loan. Right?
Yeah. We're
The older days.
Oh, yeah. Back when
Yeah.
it was. Yeah. It's crazy.
Yeah.
Or people were just like, the crazy part, like when I was first coming in the industry, where people were saying like, okay, stated income. I would hear lenders, and at the time you weren't educated as to, listen, agents are not given a lot of education in the process in the beginning anyway. Well, we're going to definitely get into that. You've got to have a sharp agent. But if you're not aware of what's going on, and before I was really in the industry, I would hear things from people, and you would hear lenders say things like, how much would you say you'd like to be making every month?
Exactly.
That's
insane lending.
Yeah. Or when someone asks me, I want to call, how much should I be making? Well, you can't make
That's
income.
today, absolutely.
You can't make it up.
But
You
it
can't
was
It was
exactly.
absolutely.
Yeah.
That's
You
what
had a
led
pulse.
us.
You had a loan.
That's
Yeah,
what led us to the
exactly.
crisis. I'm
Oh.
glad now things are more tight. And it was
Absolutely. It's
Yeah.
the best thing to be in this way. And a lot of our first-time home buyers especially will come through and ask the question, okay, can I get a loan? And usually I hear a few different things happen. There's general categories, and I'm sure you know these, but let's preface this by saying that, Ari, we know you work for a very reputable firm, and the group that you're with, without question, if you're approved, that means you're approved, not pre-qualified, which is another language term that's stated frequently that basically means, okay, we sort of thought about running your credit. We haven't really done anything yet, but yeah, kind of think you'll probably be able to get something. So here, I'm going to give you this piece of paper that my mother wrote her signature on.
Or I feel there's something online that says, oh, I can buy a home for 1.5,
It's just bait to try to get you to work with them. And they may not mean anything by it, but it's an enticement to keep you intrigued to work with them. An important thing to know is that there's different types of lending. If you have cash, you don't need to worry about it at all. If you're looking at maybe a first-time home buyers program, there are more of the traditional routes, which are VA, FHA, conventional. There are also direct lenders and hard money lenders. So we already know about cash. So when we talk about VA, a lot of people I'm sure, call you, and we love to be able to, that means VA stands for?
Veterans
Administration loan, right?
And VA is a great loan. It's only for VAs, of course, for veterans, and 0 down, no mortgage insurance. Also, there aren't any fees. The seller has to typically pick up the fees, which makes it a little bit more difficult. And it's 0 down, so people get turned off by 0 down. And
you're talking about the sellers.
The sellers, yeah.
Yeah, I can speak into a little bit about that.
So it's great for consumers.
Absolutely.
It's fantastic for consumers.
We love to honor our vets. And coming myself from former law enforcement, I would love to be able to offer the opportunity to anyone who served to fulfill that loan and that home buying process with honor. The trick is that there are a couple problems with regard to having a VA loan in a market like this. When we have fewer homes available, when we have multiple buyers coming in at the same time, sellers have a perception, whether it's accurate or not, that a VA loan is more costly to them. So frequently, if you're in a multiple buyer scenario and it's a great property,
and the market is as aggressive as it is right now,
it's really almost impossible to get it approved easily.
To get an offer accepted.
The approval of the loan itself, that's granted, but just approved from the sellers, and another story. Accepting that offer is a challenge. Not to mention that if you're thinking about using a VA loan into a townhouse or a condo, anywhere there's a homeowners association, the building itself must also qualify. So those homeowners associations also must meet the same criteria that the lending institution is requiring. So, for example, they have to have reserves in their accounts.
They have to have a certain amount. Yeah, they have to actually ask, get all their paperwork together, their financials, and
this is the HOA we're talking about.
This is the HOA, the
in
association,
addition to the buyer,
and send it over to VA and have them approve that building or that project. And same applies for FHA, Federal Housing Administration. That's a loan that you can do as low as 3.5% down. Both of these loans are only for a primary purchase. It's got to be a primary residence. But again, it does make it a little bit more difficult if you're looking at a property that is considered a condominium. PUDs don't apply. Planned unit developments.
I thought you were talking about putts, like there was a putts in the middle of the deal.
No.
Those appear too, Ari.
Hey, not here to. I'll leave that up to you, Coco. But
we're just calling it like it is.
Yeah.
They do appear.
And sometimes, if someone is an FHA buyer and they do find a condo that's not FHA approved, they can either go through the long process of trying to get that condominium project FHA approved, or they can go with conventional as low as 5% down, depending on the loan amount. So if it's a loan 417 below, they can go as low as 5% down on a regular conventional purchase. That's another option that a lot of first-time home buyers may consider instead of going with FHA or VA, which is only offered for our vets.
Right, and I love those options for people. generally speaking, if you do want to have the opportunity to use your VA or FHA, those two, since they're government loans, they must be approved in the same process. If that homeowners association is not approved, you can go through the process of getting them approved. However, keep in mind that if you choose to spend the money to do that, I hope that that property is still available for you when you get done. And that can run, many thousands of dollars to get that process done. Plus, you have to wait for that time. It usually takes at least 2 to 3 months to get done.
Yeah. I don't know if it costs thousands of dollars, but it definitely requires a lot of participation from the association.
And the costs I've seen and the groups that I've seen offer it usually run between $3,000 and $5,000 just to get it approved. And that's not including the purchase. And even still, the certificate is only good for a certain period of time. So even though it's approved, it's not permanently approved. It's only temporarily approved. So it gets complicated, as you can see.
And it is sad that that the veterans who serve our country, they
Absolutely.
get into a situation like this. They feel like they're getting a very good deal, which they are.
Yes.
Absolutely.
But it's not so favorable for the sellers, and we get to deliver the bad news.
Well, I mean, and not that I agree with this, but let's say you're you're selling a property, and just to speak candidly here, you have someone coming in there bringing 20% down, or you've got someone coming in there with 0 down. Which one looks more attractive to you?
Right.
Naturally, the person putting down 20%. Not that I agree with it. I mean, if you have a good lender that does all their due diligence up front and sends that VA loan and gets it underwritten even before they find a property, then you really don't have much risk involved in accepting a VA offer. But nevertheless, in this very competitive market that we're currently in, it does kind of put the other offers ahead of this one. We've got a lot of people coming in with cash, big down payments, and they kind of fall to the top of the list. They don't fall. They rise, I guess, to the top of the list.
They do.
Remember,
They do.
Coco, recently we were looking for approved condos in Hollywood, West Hollywood area.
I do.
We found how many? 2 or 3?
Yeah.
Literally. You can go on the government website. We can show you the link for it. We can show you the current standings on those. There literally are 2 or 3 for the whole county.
Most of them are just expired, too. They just need to update some of the information.
Yeah.
But when it was back in 2011, 2012, 2010,
yeah.
when the market, 2009, when the market wasn't the way it is now, there was a lot of VA and FHA approved projects.
Absolutely.
If you
It
recall.
makes sense. It makes sense.
Yeah. And
Wait.
if you look back, they've all been expired since
Yes.
2012, 2011.
Yeah, they've had certificates there, and renewing costs them more money, and then they have to requalify, and they may not be able to. Plus, it also can depend on whether or not there are a certain number of renters in the building, and as well
Yeah,
as any
that's-
litigation pending.
Lots of requirements.
Yeah, so
At this market right now, even cash buyers get beaten from
Yeah.
yeah,
higher offers,
Yeah.
higher
absolutely,
offers.
absolutely. And investors, they're really looking out there as well. So that kind of gives you an idea that VA and FHA, and it's very specific to certain locations.
Yeah.
I'm not saying it's all over everywhere in LA County. That's certainly not the case. But in Los Angeles in general, it's certainly a tougher market. And if you're in the most volatilely moving markets, which I would say the micro markets would include areas like West Hollywood, Studio City, Sherman Oaks, maybe even, you're really looking at the highest turnover of properties.
Yeah.
Silver Lake. Really, the competition is high, especially this time of year. So keeping in mind the different options you have available and working with the lender who will share with you multiple programs that could be available and how you can plug in is extremely important.
The one suggestion I would advise anybody when they're looking to purchase a home, first thing you need to do, get pre-approved, get with someone that you trust, and sit down with them and figure out your finances. Unfortunately, there's so much that you need to cover: your credit, income, assets. It's good to start early. You may not be
Absolutely.
approved tomorrow, but you may be. Let's say right now you only have the 3.5% for FHA. But you can save your money. That few months down the road, you may be able to get into a conventional. That's what you need to do. Get your ducks in a row. Plan ahead. It's never. People say, "Look, I'm planning to, buy a home 6 months from now." If you want to buy a home 2 years from now, you need to start planning now.
Absolutely.
So first things first, Ari, tell us, what do you need to see from a person who is coming to you and asking for a loan?
Well, people's
What are
finances
the items
are pretty.
that somebody needs to
Generally
collect?
speaking, people's finances are very complicated. Some are simple, some are complicated. But typically, if someone's a W-2 wage earner, we would get 2 years W-2s, 30 days worth of pay stubs, 2 years tax returns, bank statements, 2 months worth of bank statements.
Mm-hmm.
If they're self-employed, we will need not only their federal tax returns, but we'll also need their business tax returns. If they're not, unless it's a sole proprietorship where it's reflected on their Schedule C. So you don't need to write this down, Gregory. You call me.
No.
Are you
What
taking
I
notes,
typically
Gregory?
I'm writing something so I won't forget to ask you later.
what I typically
Is that about your 1099?
I was speaking with a few friends of mine last week, and they asked me about co-signing, like how can somebody co-sign and all that. So I would like to ask you that later.
Okay. We'll get
Because
it.
there's people who ask about that.
They do. Okay. Co-signing is not that simple when it comes to a home loan.
Yeah.
As easy as it is when people think of co-signing, they think a lot of car financing,
Yeah.
where someone's credit is just really going to help them get either a better deal or get them approved. We need to see everything for them as well. And if they have any existing debt, if they own a home, now we need to factor that in.
Plus, the co-signer has to be in the title.
Co-signer.
It's not the same. I think
They're-
what you're saying, you're making the point that if you were looking at a car, yeah, you're right. I mean, I'm sorry, I didn't quite catch that when you said it, but yeah, when you're looking at a car, you're right. You have to be both on that title. But I think Gregory's point was that when you're getting a
have to be-
loan,
Yep.
you either have to be on the loan.
They would have to be on the loan.
Yes.
Therefore, they would have
I
to
mean,
be
yeah.
on title. Now, what you decide to do after the fact, that's completely
Right, that's
up
a
to
different
you.
story.
You can transfer title, so on and so forth. But yes, they're co-signers. They would have to be on the mortgage and the title as well, closing. Yeah.
And I think it's really great that you mentioned that you need to have your tax returns set up for at least the last 2 years. It's really important, and especially in LA and Los Angeles, as glam as we are here, and we work with people in production in 1099, actors, actresses in the industry.
Yeah.
So many of our friends are in this type of situation where they have to set up their taxes and know. And a lot of them are very excited to share that, like, hey,
Yeah.
I had absolutely no taxes I had to, give back or pay this year. That's kind of an indicator that maybe not going to be so great because
they didn't have that much income.
if you don't
possibly.
show that you have the income,
Yep.
it's a catch-22. It's a double-edged
Yeah.
sword. You didn't necessarily pay, but you didn't necessarily show that you made anything. And since you don't show that you make anything, you have to average out the last 2 years and project into the next whether or not you really qualify.
Yeah.
So setting those up, and sometimes I've even had clients go back and redo their taxes. They refile and put themselves in a better situation so that they can take advantage of the tax credit they get in this current year.
I'm not encouraging anybody to do that. Sorry, but
Well,
but
if we refile, that's
well,
up to them. You
but
definitely want to talk to your CPA about it. I'm not doing them.
If you want to amend your taxes, that's fine. But I definitely would not suggest paying exorbitant amount of taxes or amending your taxes to qualify for a loan. But if there's some mistake made, there's some mistake.
Certainly, I
that you
suppose that
need
could be
to
the case.
But
Yeah, the mistake was I shouldn't have put that on my taxes.
and it happens. There was some income that you failed to include in your taxes, or some deductions that were a little bit exorbitant. Maybe you miscalculated. It happens. People amend their taxes, but nevertheless, I mean, you just gotta get with someone, sit down. If there's items on your credit that need to be fixed, you need to fix those. That will affect your interest rate. If that will affect your interest rate, higher your FICO scores, the better interest rate you're going to get. It applies to everything, credit cards, cars,
And
anything.
speaking of those interest rates, I think my entire point of that story about my parents buying the house when they did
What was the
that
rate?
their interest rate was
15?
18%.
Wow.
18%.
Yeah.
18%. So honestly, they were paying the same price that you would pay in today's market.
And now
For
we're complaining
$21,000
for 4%.
Holy smokes, they could have barely make the payment. I know
Yeah.
they were having trouble. I mean, it wasn't like they couldn't make the payment, but they were both working 2 jobs. And of
Well-
course, it didn't help they had a bunch of kids, but that's a different story. And I never asked for anything. I don't know what.
Well, I mean, it's. I mean, I think it's great. Owning a property. And if you get that mortgage interest tax write-off. I mean, there's a lot of advantages. Not only are you not blowing your money away just renting, especially with the cost of rent these days, it's just ridiculous.
We frequently have calls. We had a call this morning, and someone is paying $3,000 in rent, and their rent's going up another 10%. Like, well, it's definitely time to think about it. And that's a whole nother dialogue in this country that we're seeing. Is this this is no secret. This is not Coco's version of the world. This is known fact that the separation between the classes has grown, and the middle class has pretty much really disappeared.
And it's getting worse and worse. Rents are going up. The gap keeps opening and opening.
Absolutely, and it's getting harder and harder for people to purchase unless they make plans.
Less
So
people save.
how are they going to live?
I don't know who said this, but if you fail to plan, you plan to fail. I guess, right?
Yeah.
Absolutely.
Was it Abraham Lincoln? I don't know.
Somebody
Could be.
brilliant.
Someone like that.
Ari
Gregory
Tanush.
Papuciano, maybe. I don't know.
I think Gregory,
Ari Tanush
Gregory once
today.
told me. So plan ahead.
Yeah,
Plan
that's why we advise everybody to just buy something, even if you don't love it. Your first home, even if you don't love it,
Yes.
just buy. Be a homeowner now, because in 2, 3, 5 years, we don't know.
We don't know where that's going.
True.
And we don't know how much harder it's going to be right now. We even know, like, attempting to rent in areas like Santa Monica. They're known for being the highest rents in the country. I mean, I love Santa Monica. Don't get me wrong. It's brilliant down there. It's beautiful. It's
And
gorgeous.
we just filmed our second
That's
Glam
true, we were
Estates
there.
video.
Oh.
By the way, Coco, where can people find us?
Glamestates.com, I believe it is.
Glamestates.com, also on Facebook, Instagram, and Twitter.
Oh, what's your phone number, by
Glam
the way?
Estates.
Maybe you should tell someone where they can reach you.
562-537-2595.
Oh, that's awesome.
And I don't remember yours.
There you go. That's okay. Call Gregory first. It's all good.
It's 323
425.
9484.
Excellent,
There you
sir.
go.
Excellent. You've passed your quiz. No, but honestly, we have really dedicated ourselves to making sure people are educated and know where they can find information. You can find these resources when we're done later. Again, they'll be available on the website later. If not, you can always send us a message or call us. You can email us at glam@glamestates.com. That's certainly available to you at any time, and we'll get you any resource we have available to us. We're willing to share it with you. No problem, no questions asked.
We also blog after every topic, after our radio show. The next few days, we blog about it. And so you have
absolutely.
like tangible information.
We're not going anywhere. We're still here. And that brings us to the next statement I wanted to really point out, if you don't mind. And you don't have to necessarily comment on this directly because he's such a nice guy. Listen, Ari is a really nice guy about making sure he's very...
PC.
There you go.
Okay, correct,
PC.
maybe.
I don't have to be, so it's cool. So I just wanted to say that not everyone, in the multitude of years that we've been in the industry, and Ari, you see things from the perspective of your very professional, smooth way of making sure a loan is completed properly. We, however, don't always run into or interact with individuals who operate the same way. Whether they mean to or not is a different story. It's not that they're necessarily coming with intention to do a loan improperly. But unfortunately, just like with many agents, you have to find a professional who has great experience and knowledge in what they're doing. So keeping with some of the bigger banks are one way to go. Also, you've heard things like direct lending. Now, when you talk to a client who says to you, Ari, My buddy said his brother's uncle's friend's shoemaker, who once lived in a shack out in the desert somewhere, bought a house in 1847, and they had a direct lender. What is that? When people ask you that, how do you explain to them what direct lending is?
Well, direct lending is just a lender that has their own funds. They typically have a warehouse line that they can lend their own money. They don't have to wait for the investor to send the money over. They can send their own money to fund the loan, basically close this loan. They can do a table funding, so they don't have to actually wait.
Table funding, is that when you put the money on the table?
Well,
Like you
that's
bring
I
the
think that's
cash in a
probably
black bag
it's
and you
table
put them on
funding.
the
I
table.
like
that,
it.
that you don't have to they don't have to actually have to get the original loan documents back in order to fund that loan.
Got it.
So they can take that, and that's really the only different. A direct lender is I think in my book just as reputable as a bank, but just they typically don't service that loan. They sell that loan off.
Almost,
Yeah.
generally immediately it goes to
Mhm.
a
Yeah,
larger commodity
and then some
group.
some do service it themselves. Some, very few, but for the most case, it's sold off, packaged up, and sold off in bulk.
And how do you feel there when you hear comparisons? Do you ever hear about closing costs being higher generally with direct lenders, or do you see them kind of across the board with big institutions like you're saying, the big four banks, as we all know their names? I'm sure you can guess what they are. And others. But direct lenders have a generally a reputation for offering different types of programs that can also fit, but I have a feeling that the big banks have them as well.
Well, everybody has their strengths and weaknesses. I as far as I'd probably say big banks are more competitive on jumbo when it comes to their interest rate and their pricing. In certain cases, not all. As far as fees and everything else, no, they're all. Some will charge more than others, not by much, but that's just because of, what they pay. Well, you probably don't know, but just based on their fees and how they, pay their processing and underwriters and whatnot. That's something that you need to ask. What are your bottom line fees? Besides that, direct lenders and banks and, and brokers, they all can do pretty similar things. Some there's certain banks that can do certain things. Certain banks or investors that can do certain things. Like they say there's stated income programs out there right now. Are they as prevalent as they used to be? Absolutely not. They typically require 30 to 35% down. The rates are going to naturally be higher. There may be some additional costs involved as well. But I don't see any really major bank, any of the major banks that we are familiar with offering any sort of programs of that sort. So they're not as common as you think. So there are certain banks that will do certain things. That's it's difficult for a consumer to try to narrow this down. It's probably best to just reach out to your loan expert and get their advice. I always believe in you do what's best for the customer. You do right by your customer. Whether I can do the loan or somebody else can do the loan, you always try to do what's best. That's I've lived by that theory for as long as I've known. I've done mortgages and period in life in general.
And you have proven that to us. You've helped a lot of our clients, and we know how you work.
So I don't want to. I don't want to say one does some things better. Some people typically say, "Oh, the banks are slower. The banks are this." That's
It's tough on the other side, though. Trust me.
Again,
Get stuff done.
You have someone. It not only the onus is not only on the bank or the loan officer, but the consumer, the client themselves, on how quickly they are in providing the documentation that's legible, thorough, and just providing everything that they ask for. Banks these days, they're, if something is blurry or something doesn't come, and this is not just banks, lenders in general.
Sure.
If something is not legible, they're not going to accept that documentation. If you can't read it, they're not going to. If it's like a bank statement and they're asking for all pages and you provide what you typically always have to provide every single page, and you provide pages out of it says pages 1 through 4, and you provide pages 1 and 2, and you say pages 3 and 4 are just disclaimers. It's useless. The underwriter does not know that. The lender does not know that.
They want full disclosure.
They need full disclosure. They need everything.
And by the way, a bank statement is not the slip you get when you withdraw money, right?
No.
That's true.
I haven't had any.
And you don't send
yet,
it by a
but
picture with your nail like
That's
that.
awesome. Yes.
a lot of people do take pictures of things on their phone, and certain things are acceptable with you taking a picture by your phone and maybe emailing it. Luckily these days we have these wonderful things called smartphones, and you can do that. But I'd also encourage, if you are going to use your phone a lot and you are on the road and you do need to sign documentation and send it back, there's scanner apps, and those make it look pretty clean. It looks as if you faxed or scanned. It's sometimes even better. And you could take a picture and it looks, I do that myself when I have to, not for my job, but I do it personal if I want to make a copy of a receipt.
No, it's really helpful to have those apps. There's some great apps out there that really can help get things rolling for you in a better way, faster, and get those documentation requirements completed in the timeline that's required. And it may not seem like it's a big deal at the time, but it really can mean whether or not you get a deal accepted.
Right.
It can make a big difference. And another type of lending, as our favorite one we talk about from time to time, is hard money. It is hard money.
It is very hard sometimes.
That is.
Hard money sometimes isn't as easy as it's supposed to be. As easy as it's supposed to be.
It's arrived. Session 2.
Yes.
It's official. That's what she said.
Sometimes hard money can be,
No, I know people that have
because you can't pay, it's high interest.
It's difficult.
That's high. And it's sometimes not that easy either. Sometimes hard money lenders have their requirements as well.
Absolutely. I mean, they're great. Listen, hard money has its place. It has a place in the market, most definitely for people. However, for the average buyer, especially if you're a first-time home buyer, it's definitely the route that is least likely to help you in your financial future. The interest rates are generally the lowest I've seen. The lowest I've seen is 8%.
No, I can't tell you that. I've never been a hard money lender, so I can't.
It's the
I can't
lowest
give
I've
you,
seen in the flyer and documentation that I've seen over the time.
Plus
it's generally 11 or more, and it's
low term. It's
absolutely.
a short
it's a
term.
short, it's a shorter,
years,
it's a shorter term. It's a
maximum.
5-year fixed or something.
Not
And-
even.
No?
That's
Maybe
usually
3 years?
you don't even.
Maybe like a 3
Yeah,
year?
but what I see
There's-
usually is
There's one rate
36
sheet.
months, maybe.
One rate sheet that I saw, I think they require 35% down. And it was like an 8% interest rate.
Yeah.
That's
It's
if
tough.
they have a higher FICO score, I think it went down to like a 7.5. But that was, that was a few months ago. But
Mostly these loans are used by builders or
by investors,
developers,
Yes.
developers,
And they definitely have a place in the market. They just don't necessarily have a place in a residential family or individual's purchase plan. So you may hear the term from time to time, but it's generally not something that's really financially sound or makes a lot of sense for someone who can qualify for other kinds of loans. Why not?
Yeah.
Why not pay less? I'm just saying. Why not pay less?
Why not?
Just say it.
Sounds like a commercial. Doesn't that sound like? Why not pay less? Wait, what?
So
Maybe a shoe?
What?
Shoe.
we
Why
are
not
kind of running
choose?
out of time. I'm so sorry. I know we
Sure.
all have a great time here, but we need to speak about the conventional loans.
Well,
Right?
conventionals, sure. Let's talk a little bit about conventionals. Those
And-
are the brilliant ones.
And Ari can tell us his
Well,
options.
conventional you can go as low as some can go as low as 3% down, but typically just regular conventional is 5% down. You can go as low as 5%. Conventional is a little bit better than FHA, just because of the mortgage insurance is a little bit less expensive. Also with FHA, there's an upfront mortgage insurance premium that's 1.75%. That's conventional doesn't have that requirement. If you're looking at a condo, you still need to look at certain things on the condo to make sure that that's approved condo.
Mm-hmm.
But otherwise, it doesn't have to be like an FHA, where it has to be in an
Right.
FHA approved project.
You can get even a fixer with like a fixer upper.
You got to be careful on how much of a fixer, yeah, but nothing that's in the middle of
Not in the
missing
construction.
kitchen.
No, I'm not
missing
talking
kitchen,
about that. But
no safety
a
hazards.
home in a not
Yeah.
so great condition, not so up to date.
Livable condition,
Yes, livable.
preferably.
Certainly. Certainly. That would be the preference, absolutely.
Yeah.
But yeah, it could be, outdated is outdated. Some homes, what's the average? Homes are built in 1962, 1967 here.
Absolutely. Yeah,
So-
the mid 50s and 60s are really the high time for
Right. Yeah.
production of homes here at least in the San Fernando Valley. If we're talking about into the West Hollywood area, you're talking before then, 50s and 40s,
Yeah.
30s.
I know you
frequently.
always love to say the story about why. Because the
Yes.
soldiers didn't go
Yes,
to East
after World
Coast
War
and they were
II.
dropped off here.
Because I'm from LA and I
Is-
talk about
Is that
LA.
what? I don't.
LA history.
You can fill
by
us in on
Coco
that
Selby.
story
By
later. I don't
Coco
wanna-
Selby.
The glamorous part of LA comes from the fact that after World War II, the GIs were left out here on the West Coast instead of returned back to their home base on the East Coast. They had an option. They didn't have an option really. They had an option to figure out how they're going to get home to the East Coast or stick it out here on the West Side. And nicer, it's
Nice
warmer.
and sunny. Yeah.
And they had all these GIs they were dropping off, and they said, well, we got to have them living somewhere. So you'll see a lot of homes that came up, especially in the Hollywood area, and then you saw triplexes come about, and you came through into North Hollywood, which was really, that's not really in Hollywood. That's really on the other side of the hill. But they were selling them as north of Hollywood.
Yeah.
So that's how North Hollywood came about, and it became Studio City. But we started off with homes that were 2-bedroom, 1 bath, little, anywhere from 800 to maybe 1,000 square feet, and a lot of them still exist this way. But that was really come about. You got tract homes. These tract homes were built to be in mass production because they had all these GIs they were dropping off in the 40s, and they're like, holy smokes, where are we going to house these guys? They got to go to work. We got to do something with them. What are we going to do?
Right.
So you saw these production communities being turned up everywhere. So that's why they came out in droves, and that's why they're all really the same format, just flipped in different directions architecturally. And there wasn't a whole lot of design involved. They were just like, holy smokes, build them a place. Hurry. Thank you.
By the way, I'm looking at the social media right now. We're getting a few messages telling us how glam we are today.
Oh.
Thanks, everybody who's listening.
Not that we didn't have any famous stars living in this area like Marilyn Monroe and
Right.
What station is
Glam Estates Radio.
Oh.
Okay. Oh my goodness, we're having so much fun. Well, that brings us probably to the next step. We're talking about glam, global and LA markets. Speaking of which, location, my favorite segment we're talking about. As we get into what takes place in the market here in Los Angeles and the trends that take place, frequently we're in such a microorganism of lending and buying industry. It's easy to forget how we're impacted by things taking place outside the U.S. and how they can have effect on what we're doing in the market. For example, one thing that's been coming up, and we are frequently in conversation for us specifically, is the situation that's taking place in Greece. Now, Greece has some really beautiful things in it. Gregory, do you know anything about Greece that you can share with us that's
No.
kind of cool?
Kind of cool. Nothing cool
Yeah.
is happening lately in Greece, other than it's summer and the islands are full and they look like a completely different economy. Other than that, Athens doesn't look so cool lately,
Oh, you're
especially
so
this
funny.
last week. Especially this last week, there's so many meetings back and forth with Europe, especially with Germany, as you know. They're all trying to meet up like halfway in some things.
And I don't know if a lot of people realize this, but there's a crisis going on in the European Union, whether or not there is intention to be able to support Greece to remain in the Union. Now, if they stay, they're going to have to continue to, someone's going to have to agree. There's basically a huge debate over credit. And
Right. I don't think they can kick us out because we have euro and like imagine California goes out of dollar and uses another currency, everybody's going to get, all the other states are going to get affected. So we have this in our hand to kind of push not to accept these meters that are trying to imply to us, like to us. I mean, to the Greeks. They want cuts everywhere, and
Well, the argument has been that, forgive me, I mean, you correct me if I've got this
No.
wrong, but the argument has been that the claim is they've bailed out Greece, but at a huge interest rate, at a rate that is unbearable for the people to survive. And if Gregory has available, and he was sharing with me earlier, the statistics.
on this, yeah, I have the statistics. I have the
on
statistics
the unemployment
right here.
rate, the amount of people that have been without food. I mean, it's a crisis in this country.
I want to comment something on this. There is like a specific percentage in European Union that European countries are supposed to lend money to each other at about 1%, 1.2, 1.5. So in order to help each other with low percentage, but they lending to us with like 8 and 10% in order to help. That's not help. So, But anyway, so yeah, the statistics are out, and we see 25% drop in gross domestic product. We see 28% reduction in public sector employment, 28.5% drop in food consumption.
Wow, and
Like,
literally people.
With 1/3 less.
I mean, I know he's saying it with a jovial heart, but the reality is, people are actually hungry.
45%.
It's unimaginable that people are in this European Union and suffering at the rate that they are. And there's a plan that the Greek government, and mind you, I'm not Greek, so I really don't have a family historical connection to this at all. But when someone sees, to me, this is very unjust. And even if I take that part away from the conversation and I look at it from a global perspective, the euro will not do well, and the U.S. will do extremely poorly if the Greeks have to come out of the European Union, because it's a domino effect, and it will affect. We're already looking at having to really fix the issue. There's many different players involved: Germany, Russia, China, and the U.S. Ari, do you have any thoughts on this that's been going on as far as from an economical perspective?
Well, it's a global crisis. It's definitely affecting our economy as well. If you can see, the Dow has dropped, significantly. If it did recover
around 200, right? It just
did
even
recover
today.
a little bit. I mean, I have to say, it's. I can't complain too much. Because
Well, my food consumption hasn't gone down.
Well, no, sorry, Gregory, but
No.
it helps our rates when the economy is not doing well, and this is of course affecting the global economy. It actually caused the yield of the 10-year bond to come down a little bit, which in turn caused our interest rates to improve slightly. Sad but true. That's when our rates are doing their best.
It is what it is.
Sure.
When the economy, the yield goes down. So as a result of when there's
Be careful what you say. I can close your microphone.
I know. I feel bad saying this, but whenever there's some sort of turmoil in the economy, it actually
but
tends to improve our rates surprisingly.
No.
So
Yeah.
That's presuming that the U.S. is going to continue to help. Mind you, if Russia is going to help, that's going to greatly change the outcome.
In
of
general, that's
possibility.
what's happening. That's another thing that we have in
Yeah.
our hand to kind of push Europe, is that we're looking for, and they know we're looking for other alliances, different alliances, maybe with the Russians. They started some new projects in Europe, and we use this, against the Germans, because the Greeks, they can't handle all these meters and all these poverty that we've been 50% unemployment among for people below the 25s, below
Yes,
25
below
years,
25 years
yeah,
old, and jobs. I mean, we can talk about
and that
jobs.
includes and that includes the people who work part-time 4 hours a day and they make $250 or less a month.
A month.
I mean, yeah, that's employment. That doesn't count as unemployment.
And virtually food is almost the same price as we pay here.
Yes.
It's
Only
very
rents.
difficult.
Only rents and housing is cheap
It's
there. Other
affordable.
than that, the prices are the same like here,
Wow.
and same pretty much we're one of the most expensive countries in Europe. Yeah, with the lowest income per capita. Like
Wow.
So we're saying is keep your ears open for any kind of changes. You may hear about this, but just know that the U.S. can be really seriously impacted by anything that's happening in this country, and we can be affected by what happens outside this country. We may not be always on the top of the news program. If you're watching the local news, the first 3 or 4 things, they aren't necessarily going to say it because they're talking about the local stuff.
And I have to say, U.S. government is very close to Greece, and Obama has tried to reach, for a common agreement between Greeks and the rest of the Europe is helping a lot. Obama is helping a lot to reach to an agreement. But we will see. Yeah, definitely everything that happens there affects us here. 16 hours, 18 hours with a plane, the other side of the world.
And the flip side to that is you can get really some of the most beautiful properties you can imagine are available on the planet.
Right.
And we even have the listings for this.
It's
just
what's
amazing.
happening is the islands are like, of course they are in the same economy, but they look like they're in completely different economy. For like 5-6 months during the spring summer, it's like completely different economy. Like they're packed, you see people are happy, you don't see anything like you see in Athens or Thessaloniki up north. So investments there are
second capital.
The second capital. that doesn't have a metro yet. But anyway, I'm just kidding.
Send us messages. Listen, post something, send us a message. If you're interested in hearing more about what's going on either in lending across the board, we're here to inform you, to help you know what your next steps can be here and globally. Listen, this is why we're watching to see what takes place outside the U.S., because we are a global economy. We are global real estate individuals who work as a team together to allow our clients the best opportunity worldwide.
Right.
So if you want to know what's available, listen, that brings opportunity as well to investors.
Exactly.
So if you're looking for a great investment, holy smokes, Greece is the place to go. You can call us for details.
That's
Gregory,
right.
what's the phone number again?
Mine or yours?
Oh, sure.
562-537-2595 and Coco's 323
425
9484.
Nice. This guy's great. Told you he was great with numbers.
I'm not sure if I mentioned last time for us that I still have my partners in Greece. I used to do real estate there, and I still have my partners in my office there. So we get a lot of deals, very good investment opportunities in Greece, especially in the islands. That investing there makes really good sense. And the numbers are great.
And we do transactions there. We fly there. We do transactions there. Yeah. We meet people who are never come to the U.S., who are only citizens of other countries who come to Greece. We work with them, and we work in other locations. So it's good to know what's happening. Yeah. Call us for whatever your questions are, especially if you're looking to sell or if you have questions about buying. Feel free to contact us. You can also reach Ari.
Hello at 818-723-0760. 818-723-0760.
I love it. Can't thank you enough for joining us today, Ari.
My pleasure. Thank you guys for having me. Really appreciate it. It was a lot of fun.
Thank you, Ari. I wish we had another more hour.
It was
or another 2 maybe.
Yeah. There's so
we
much
went by
to talk
so
about.
fast. Yeah.
Yes. Thanks, everyone. Gregory, you did a great job once again.
Thank you. You too, Coco. You were very glam today.
Oh, we're here to
glam it up, baby.